Hello everyone, welcome to the Smart Market Insights here on Kalkine TV. I'm Sage. Today we'll be looking at what the federal rate hike means for Aussie investors and homeowners. And the aggressive interest rate hikes are likely to be a recurring theme in 2022. With pandemic-induced slowdowns receding gradually, it seems to be the right time for central banks to combat inflation. Inflationary pressures have been growing worldwide amidst supply chain disruptions caused by the Russia-Ukraine war. And as the Fed implements its first interest rate hike since 2018, speculation of interest rate rises are rife in the Australian market. Experts suggest that Australia might not be completely immune to the effects of the Fed's rate hike, despite its geographic isolation. And the US Fed has recently raised interest rates by 0.25%, much in line with market expectations. However, the decision has come alongside a rise in the central bank's forecast for future rate hikes. And overall, the Fed's decision was largely viewed as a hawkish one, with the central bank anticipating the federal funds rate to reach 1.9% by the end of this year. Speculation of rate rises in the US has raised concerns of a similar move in Australia, where a rate hike has not occurred in over a decade. Inflation is the key issue, pushing central banks to embrace a rate hike. At the same time, growing affordability concerns are beginning to outweigh the benefits of a rise in underlying inflation, such as an uptick in wages growth. The global influence of the Fed is extensive, while the US dollar is a universal metric of the world economy's well-being. And thus any fiscal decisions by the Federal Reserve invariably affects almost every economy across the globe. For instance, Australian bankers may have to offer competitive pricing to stay on the same bandwidth as the US banks. And essentially, this indicates that the RBA may soon opt for a rate hike to move in line with international trends. And as the Australian housing market remains a hub for volatility, the news of a potential interest rate rise would mean increased chaos in the sector. Mortgage holders would have to manage high inflation alongside rising mortgage payments each month. Fixed rate mortgage lending has become more pronounced in Australia since the cash rate was first reduced, and holders of fixed rate mortgages might see a jump in their monthly interest payments when the fixed term on the loan ends. And for those holding a variable rate mortgage, for 2 years, little has changed as interest rates continue to remain at a record low level for about 16 months. And now let's talk about why investors should worry about the Fed rate hike. The US bond yields marked an uptick following the interest rate hike announcement. Additionally, there is considerable historical evidence suggesting that an interest rate hike is usually followed by increased volatility in the share market. And the recent surge in bond yields indicates investors' growing belief that the Russia-Ukraine war may not slow the momentum towards interest rate hikes. And these same factors can arise back home in Australia after the Fed's decision. Interestingly, the immediate impact of rate hikes was visible in equity markets and was surprisingly upbeat. And the US and Australian markets responded positively to interest rate hikes, as it was largely in line with market expectations. The Australian dollar also jumped following the news. Some market experts predict that talks of an economic slowdown will build up in Australia alongside these rate hikes, and a rate hike in Australia could add further uncertainty to the return on equity investments. While certain types of stocks perform well during an inflationary environment, it also silently eats the returns obtained on other investments. However, fixed interest asset holders might be able to ward off some ill effects of inflation. Thanks for your company on that report. That's all for now. We'll be back again with the exclusive Smart Market Insights show, but till then, do keep watching Kalkine TV for the latest market insights and related hot trends. Sage signing off for now.